Hey everyone, my name is Alex,
I'm Conrad.
I'm Ryan.
and we run a group called West Bank Financials where we focus on boosting financial literacy among the youth. And one way we do this is through hosting podcasts with amazing people in the financial field. Today we have a really exciting guest with us, Mr. Jason Liu. Jason Liu is an experienced leader in the fintech and risk management space who held key roles at companies such as Ant Group, PayPal, and UBS. So hello, Mr. Liu. To kick things off, when I was reading through your bio, I noticed you had a really diverse career. So could you tell us a bit about your journey, like how your journey went in tech and the fintech space?
Yeah, that's a very good question. When I started out 30 years ago, I just wanted like one of your teenagers, right? I have no idea what I want to do. My dad set me up to study computer science. Apparently, he read an article on the front page of this main propaganda picture of newspaper in China. It said the computer is going to be the future. Apparently, that one highline from my dad to throw me into the deep end into computer science. This is like 30 years ago. It's not like today. Every kid wants to study computer science. I have no idea what computer science is, but it just sounds cool. So my undergraduate and graduate school all in computer science. Interestingly, my first summer intern in America, this is like in the DePaul University in Chicago, I got into a summer internship job, which is just programming. I think it was programming in C++. But the vertical, where the software was being used, actually in financial trading, is actually in derivative trading. That got me intrigued because I originally always thought computer science and engineering has to be in a technical field, right? You build cars, build airplanes, build appliances. I never imagined, computer can be used in such a way in finance. So that job got me interested into merging technology with finance. I think that's got me started. And then thanks to that job, thanks to the people I know, the things I start to learn about the complexity and intricacy of the financial market, I decided to stick to it. That's kind of something that echoes with my personal interest and passion. So I decided to stick in that vertical. Even though I was trained as a computer engineer and a computer scientist, I decided to stick in that vertical, which is finance. That's how I got started.
So you talked about how you were raised in China, right? So from your perspective, what are some key differences in the work culture or lifestyle between the two countries?
I think both countries have its own strengths and weaknesses. I think in China, broadly in Asian culture, there's a very strong focus on fundamentals education. Nowadays we call them STEM, but in China we are all focused on math, physics, and chemistry. So that was a tradition. Even in my age and before my generation, I know my sisters, my other relatives that are older than me, in the elementary and middle school and high school, they all focus primarily on science and math. I think that's one of the key differences between, preliminary education in China and Asia in general versus in America. In America, I think here kids have a much more freedom to kind of explore their self-interest in the early years in education. I don't think the teacher or the society or the parents are kind of nudging you at such a young age to be a scientist or engineer. You are more free to explore your interest and try to discover the passion, what you are really interested in to do later on in life at this early age. Or in China, even today, even you are only 10 years old, you are, after school, you go to math camps, So I remember an interesting story. When I first landed in America, I have to go to Walmart to buy some, supplies, basic stuff like coffee machines and stuff like that. At the checkout counter, the clerk kind of scanned my item and then tried to tell me how much I need to pay. I already told her, I said, this is how much I need to pay. She was like amazed. She said, how do you know? I said, I just calculate the number in my head. He said, oh, you are such a genius. I'm like, I was in shock. Because in Asia, you kind of know how to do the basic calculation in your brain at the very beginning. So I think both have, either approach have pros and cons. I think we just need to be aware of it. Do not go to one extreme or the other. Sometimes you are going to the deep end, study STEM at a very young age, then by the time you go to college, high school, no, that's not your passion or not something that you are very good at, right? Or you go to the other end, right? You're spending a lot of time in sports, in literature, in arts, then you cannot do even 1 + 1 = 2. So you don't want to go to either extremes, I think. Yeah.
I see. So you mentioned that sort of the education system is a little different in both China and America, but I was wondering if that continued into like careers as well and into your jobs, and what differences you noticed in that.
Yeah, I thanks to my career success to America in a lot of ways. I think at least during those era, I think the work culture also evolved in America quite a bit. When I was just got started, I primarily worked in the Midwest and the East Coast of the country. Our family didn't move to California until late 1990s, around 2000, year 2000. So back then, at least in those kind of days, the companies, when they hire someone, they're not hiring you for a job. This is something I learned very early on. I think it's going to be very valuable for me. They hire someone for a career, which means you are not matching a candidate to a job description. Nowadays, the computers industry are going such extreme, they try to do AI matching your resume versus the job description. Right? Back then, they don't do that. They want to hire you not only for you to do this job at hand, they try to look at your potential. They try to look at what your personal interests are and what your passions are, and try to help you, kind of mentor you and train you and get you to the right path of your career. So they want you to stay either in this industry or in this company for a long period of time, not just for 2, 5, 10 years, right? So I think I owe to that. I remember at UBS when I first got started, we have a core value for the company. It's called 3T culture. The T, one is technology, of course. It's a trading company. It's very heavily driven by algorithms. Back then, imagine this is like 30 years ago. Nowadays, everybody's saying AI-driven trading. We are doing that 30 years ago. So technology and training. That's the second pillar. The third pillar is training, trading, and technology. So trading is our business, right? So you have to understand the business. It's very disheartening to learn today. Most of the folks in the field of technology are trained as a technologist. You only need to know computer science. You only need to know electrical engineering. You only need to know mechanical engineering. You are not being trained to set root deeper into a vertical. Are you going to utilize your engineering skills or your computer science skills to build cars, for example, or build appliances, or build houses, or build something, right? Or utilize that knowledge in finance, in wealth management. So that's the vertical, where the technology and the engineering skills you learn at school is the horizontal. So, where you find the happy crossing of those skills. So back then, I think I'm lucky enough to be engaging a company that focus on taking someone with a technology background, but also help you find where you are good at in the vertical finance.
You talked a lot about tech, and it's like throughout your years working in finance and like CS, what key evolutions have you seen in the technological space? Like how has that impacted the financial and computational space?
Yeah, I can give you maybe two very specific examples, right, of how technology and finance can merge to improve people's lives, right? For example, at Ant Financial, one of the pain points I learned, at PayPal I used to do risk management, right? So the job is to reduce fraud. But when I get to China, I learned that that's not good enough. It's not good enough as a chief risk officer to just reduce the fraud rate. Because if you increase the customer friction, for example, you ask customer to log in, you ask customer to verify their credentials every time they buy something that's have high value, let's say over $200 or $500, it's a consumer friction. You are going to frustrate a lot of customers, especially in Asia. There's populations are aging. A lot of older folk don't know how to use a smartphone. They can barely handle a smartphone. The moment they ask them to do two-factor authentication, they said, what the hell is this, right? They gave up. They don't know how to finish the process. So we learned to utilize technology, what we call bio recognition or facial recognition. Actually, it's not just face. We utilize multi-dimensional factors, face, fingers, a variety of factors to come up with an algorithm where we can detect who you are. For example, if you log into your phone at your home, over time, we know that's your home address because, 7 to 8 a.m. to the next day, you are most likely log in from that Wi-Fi address to buy things or browse things you are interested to buy. So we know that's a trustworthy address. It's unlikely a stranger coming to your house going to learn your Wi-Fi password, sit in the same spot as you every day, Monday through Friday, almost whole day over the weekend, right? So we build a trust system where we use your face, your fingerprint, a variety of other factors like your Wi-Fi address at home, your Wi-Fi at work, to reduce the friction. So if you do that transaction once a couple of times, in the future, regardless how large an item you buy, we just let you in, we just let you through. Because it's unlikely a stranger is in your house buying a refrigerator on your Wi-Fi, right? And the shipping address to your own address, right? So Froster doesn't do that, right? So that's one example. A second example is more in the trading space, where we learned very early on at UBS that the market is very efficient in the long run. Right? If you look at a 10, 20, 30 years window, the market is very rational. But there's going to be a short period where the market have irregularities. It's irrational. It's driven by emotion or greed or fear or whatnot. And that's provide opportunity for us. So we do like statistical arbitrage. Basically look at the odds of a company who will be acquired by another company. Then we leverage the derivatives such as options and index options to arbitrage on those potential trades. For example, if Alex company will be acquired, we will basically going to be use options to long a position of that company, where we are using other options to short the buyer's company. Right? But because when the merger happens, sometimes not even the merger has to happen. It's just the market has some rumors or some speculations the merger is going to happen. The diversions start to happen, right? The target to be acquired going to go up, where the buyer stock going to go down, right? Then we unwind the trade to profit from it.
I see.
So that's another example of, because the stock market is vast, right? There's 20, 30, 80,000 different companies. It's very, very inefficient to use human method to try to find those discrepancies. So we utilize technology, we utilize computer. For example, we scan the news story from Reuters, from CNBC, from narrators, from all those market information providers, and try to find out, this article or this particular analyst's opinion, is that a bearish or bullish indicator for the stock? Then we assign a weighting to it. Then we feed those data to our trading engine. So in a way, news move the market. So there's enough news going to one direction going to move a stock. In some cases, move the whole market. Yeah. So we're doing that 30 years ago.
I see. So it's kind of like using technology to like track market sentiment. And
Bingo, exactly.
It's very interesting.
Nowadays, people think that's a new sexy stuff, but we did that 30 years ago.
Yeah.
Yeah. I know you have a career in fraud detection. Is that correct? So
Yes.
I was wondering, how do you see AI improving the future of fraud detection? Is it already being widely used? I know you've been using it in the past for UBS, but I'm not sure how much the technology has evolved since then.
Yeah, AI is not a new term. Back then, we have specific models, what we call AI models. And at PayPal, we have AI models like 10, 15 years ago. But it's not the same LLM model or GAI mechanism that everybody like shooting for today. You have a massive amount of computation power, and you have a massive amount of data. Back then, each model we have probably have, from a dozen variables of features to about 1,000 features. And nowadays, you have couple trillion features. There's, I think you can definitely find a lot of insight with the latest AI technology. But on the flip end, you got to be careful, right? The AI algorithm right now, the biggest danger is there's unforeseeable boundary issues. Or people say those are illustration effect, or side effects, right? You don't know what the model is going to do, basically. Unlike the old model, you would know the boundary. And the model are trained to do certain things. You know what the worst case would be. There's an easy way to control it, to build a fence around it, right? But nowadays, with the GAI, with the latest LLM model and other emerging techniques and approaches, you don't know. The model someday may do something crazy. How you regulate that? How do you test that? How do you simulate that? How do you build a safety fence around it so the model doesn't go nuts one day? That's the challenge. I think we need to solve it.
With your story around like how 30 years ago you used like these crazy models for a time to like try to take advantage of like what consumers might not know. So like there's like I guess you abused information asymmetry in that sense 30 years ago. Do you think like with the advent of AI, where like now the more general population can like access these models, like the strategies for like these big companies need to like change a bit, where like you can't really, there's not as much information like asymmetry now with the rise of like these models.
Yeah, I think it depends on how you look at the the evolution of the technology and what mission is trying to accomplish, right? What I worry about today is that we talk about the career approaches in the past, where the companies try to find a win-win between them and the employees, right? I cannot say that wholeheartedly today. Right now, it seems to me a lot of companies, at least a good portion of the companies, are looking after themselves. They look after their shareholders, look after their stock prices. The employees just expendable resources, right? Especially in technology, they hire the freshest, the smartest kids for 5 to 10 years. Then it's just like a washing machine, right? They just cycle them through. So I'm not sure, right now, I'm not sure 100% the evolution of AI, the advance of AI, going to eventually benefit mankind. Or benefit certain people. It's going to benefit certain industries. It's definitely going to benefit a lot of very big companies. But I'm not sure it's going to benefit everyone, like individual people walking on the streets, right? I will give you another example. In China, what we have done, something that we're still proud of today, is that we did 2 innovations. One is to be able to give people credit without filling out a credit application. In America, even you want to borrow a little amount of money, you have to do a credit disclosure, your SSN, blah, 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 right? But we know with big data, with the amount of data we collect, your spending pattern in the past, we know, for example, our online e-shopping platforms. We know who you are, we know your spending patterns. We kind of know where you live, are you a renter, are you a homeowner, what kind of car you drive because you buy car supplies and stuff like that. So we can make a credit decision on you, right? So if you are spending some amount of money buy the things you regular buy in the past, and it's a relatively reasonable amount, we make that credit decision within a few seconds without you go through a credit disclosure, right? So we can lend credit to a vast majority of our customers, and many of them do not even have a bank account. Right? So you kind of lower the barrier of credit to the people who are traditionally shied away by traditional banks. I think that's a lot of similar situations here in America where people focus on the top 20% because they make company 80% of the profit, right? We all heard about this 80-20 rule. The company make money from 20% of their top customers, right? So, but the opportunity is lying somewhere as well. What happened to those underserved population, be they are minorities or they are immigrants, or people in less developed areas in America, where they are in the deep south or they are in the Midwest. And I think there's a lot of opportunities to use the power of finance to help those people advance their standard of living, and so on. So I think technology have a lot of opportunity only if the company is doing this kind of advancement have those people in mind. If they are only focused on the rich people or the people are upper middle class, I don't think they're going to spend money or bother with exploring opportunities in those areas.
So you talked a lot about like making things more accessible to like the general population, right? Like through like what you did with like the fraud management, like with the older generation, or like the credit score in China, or like I guess more recently like the AI things. Like how important do you think like making it more accessible, like making these like things that are once viewed as like very high class, like maybe stocks, more accessible to like the general population, where like maybe these days maybe like a lot of teenagers like trying to trade themselves now.
Yeah, there's some interesting trend here in America too. I think a lot of companies also, the big companies, I don't think they innovate enough in those space, but there are small startups and new companies. Like for example, you can buy friction shares, right? There are companies you can invest $1. You can build a portfolio with $1 or $10 invested each month, right? So there's companies you can build like a kind of almost like solve a puzzle. You can build your own puzzle with different stocks, and then but you invest a very little amount into it. You can spend $100 to build a portfolio, where you own a fraction of big companies, small companies alike, and you can build that puzzle yourself, and then you can invest in it, right? So I think there's still a lot of innovation you can do there, and not only in stock market. I think you can talk about people, for example, if you are a renter, for example, right? I don't see the U.S. Seems like we have a renter class and an owner class in this country, and that has been going on for like 200 years. Why not we have built a third solution? For example, I'm just brainstorming. Why don't we build some houses where it initially attracts some renters, but they build equity even when they rent, right? The certain percent of their rent, if they stay current on their rent, and they held a good job, and their certain percent of their rent will going towards build equity as a down payment to the house that they are living in right now. They don't have to go out and shop for another house. The house, if they live in, like say for 5 or 10 years, they probably can build up enough equity from their rent to buy it. So there's innovation that's going on there. A lot of corporations now, hedge fund and whatnot, are buying a lot of real estate, right? They're buying apartment buildings, they're buying houses, but they just rent them out. Right? They want to reap the benefit of the valuation plus collect the rent for their cash flows. They're not have those renters' interest in their heart. They just want to milk the cow, right? But if those companies have a different mission, their mission is to make more renter class people to become owner class. They will do some innovation like that. So at the end of the day, it's not a technology barrier. I think the technology have some barriers that's easily solvable with the talent and the computation power we have today. It's more of a mindset of the companies. Do they want to benefit the society or only benefit themselves?
Yeah, so sort of transition the conversation a little bit, to change it a bit. I was wondering what your thoughts about crypto in general are, and what do you think like decentralized finance is going to do in the future?
Yeah, crypto has been a very interesting development. In general, I feel like the current financial architecture that being adopted worldwide are too centralized. For example, like a couple of weeks ago, the whole world is holding their breath and waiting for the Fed chairman to say how much basis point they're going to cut interest rate, right? That's just too much power. Yeah. Maybe they are doing the right thing, but still, even they are doing the right thing, a single person or a few person in the world have so much power. It just something sounds fishy because they are doing the right thing today, 10 years later or 5 years later or 2 years later, they might do the wrong thing. But they still have so much power. That means they can maybe have a lot of benefit today, what they have done. In the future, they might have just as powerful, destructive effects of what they do. So I think decentralization overall in finance in particular is a good thing. Right? So crypto is just one of a major development in that area, try to decentralize things a little bit. My personal thinking about crypto, it's also a journey, right? Before I was fascinated by the technologies that behind it, the blockchain technologies, the algorithms, the encryptions as a technology by training at the very beginning. After all those years, I'm still fascinated by it. So I think that's got to be interesting in crypto. But why I want to stay in crypto, right? Why you want to believe in it? Take a revolution, and it took me a little bit to think it through. And one day I was talking to a friend of mine, and he has been trading in and out of crypto quite a bit, made a lot of money, lost a lot of money, and then we were discussing the future. And one day that day I think something just hit me. I realized why those super talented and super smart people all building rockets, right? The Jeff Bezos building rocket, and Elon Musk building rockets and so on. Why they are building rocket? Oh yeah, they want to go to the Mars and one day start over. There's a special phrases I think Elon Musk used to describe the human culture and the civilization, right? They want to make us a modern Earth-bound civilization. So I asked myself, if they go to Mars or go to another planet, let's say, how they are going to facilitate trade? Are they going to bring some US dollars, or bring like a machine print US dollars, or print some like Mars dollars and start to like exchange that? So there has to be some sort of cryptocurrency, right? They are not going to set up a central bank on another planet, negotiate with the central bank on Earth and what they are going to trade and what stuff they are going to buy and ship over there, right? So it got to be some sort of form of cryptocurrency. So if you believe in the bound of our civilization is beyond the Earth that we live in, they need a mechanism to trade. They need a mechanism to facilitate exchange of value between each other. So that's got me believed in cryptocurrency.
It's kind of like another thing I was going to ask about cryptocurrency is about the pricing of like Bitcoin, because a common thesis that's made is like because of Bitcoin halving and supply consistently being cut, Bitcoin's going to keep going up forever. I was wondering what you thought about that.
Yeah, I mean, for a specific type of cryptocurrency like Bitcoin, I mean, it is. I mean, there's a limited, finite supply of Bitcoins, right? That's bound by the algorithm. Unlike the currency, the paper currency we use in this world, you can, in theory, print forever, right? Yeah. So there's no control over it, right? So I think in that regard, yes. I mean, if the current belief holds true for Bitcoins, yeah, the price is going to keep going up against the paper currency, because the paper currency you can keep printing. In the process, you are devaluing yourselves. Why gold keep going up? It's the same philosophy, right? There's a finite supply of gold, but the Bitcoin is even more finite than gold. Yeah. You can still discover more gold every year, but not, you can put out more mining machines to discover, Bitcoin, but it's getting harder and harder. The cost of finding it is getting harder and harder because there's a limited amount left over day by day.
I see. Well, going back
it's traditional supply demand.
Yeah, supply and demand is a major part of crypto and Bitcoin as well. But a question I had about crypto as well was, especially because it's decentralized finance, I was wondering if you thought this DeFi aspect would have like a negative impact on like the security of investors, especially because like there's no SEC regulation currently for it, or like minimal SEC regulation for cryptocurrencies. As you can see, like a lot of like frauds and scams, especially because you've worked in fraud and risk management. I was wondering what you thought about that and how.
Yeah, when we solve the fraud problem, for example, we don't use regulation to solve it. People, maybe just because I grew up in China, which is heavily regulated, centralized, controlled society, where I come to America, I got a breath of fresh air, right? So I don't believe in regulation. A certain amount of minimal regulation are required. I mean, we talk about the big model, right? Like the AI. I think there should be some governing bodies, not necessarily government, but volunteers and scholars and top engineers from different entities, including corporations and organizations and education institutions, come together to self-govern the development of AI, right? Not yet another SEC, right? We had SEC, but how many fraud that have happened? How many stock market crashes have happened? So history have proved SEC don't solve this problem. Yeah. Okay, So I don't think the government or some centralized big government agency should be established to prevent future problems. I think one is education, right? You got to educate people. That's what the things you guys are doing, which I put my head, really, really thank to you guys to educate young people about finance, about literacy in finance, which have a risk aspect and benefit aspect. So you need to learn both. Fear is good, greed is good, but a good balance of both are required to have a healthy market, right? If everybody's just overweighted in greed, you're going to have a bubble, right? If everybody are overweighted in fear, you're going to have a crash, right? So I think you need a balance. Same thing about development of crypto. I think we need certain regulations for sure, but I hope it's not through a SEC-ish government agency, going through a self-organized, self-governing body that's kind of preventing that. And also, I would say use technology to solve technology's own problem, right? A lot of those fraud issues that we solved are through technology. We don't invite a bunch of cyber police or police officers sitting in our offices and trying to manually review each transaction. At the end of the day, that's not very scalable. But we do provide education. We work with law enforcement in China, also here in America. If once we solve a big fraud case and get the perpetrators arrested, we build a story, right? We build a story either in text form or in short video form. Then when the customer utilize our applications or our website, they have an education center where they can go in, get education on how to prevent identity fraud, how to prevent, credit card fraud, for example, right? So you kind of educate the consumers about how to set up their password, how to protect their devices. When you go travel, be careful using those free Wi-Fis because some of them are set up by fraudsters to steal your information. Because the moment you connect to the Wi-Fi, they use a traffic sniffer, they steal everything. Your bank account, your password, because none of those are encrypted. People do not understand, even you have, you think you have like some sort of protection, SSL, but if you log into someone's Wi-Fi, before your SSL reach the endpoint, everything in the middle is like just plain text, right? So you can use a traffic sniffer to sniff everything out. So I think you just need to educate people on that. So still a lot of work need to be done. So I think that's why I think what you guys are doing are great. Yeah.
Yeah, I was just wondering, based off what you were saying, like what are the most common mistakes do you see companies making when it comes to security?
If you just Google the kind of like a massive data breach that we still hear every few months. I think last year there was a massive Target data breach, right? The CEO was fired. I think the whole exec team was fired. They use the database element password, right? It's like a 1, 2, 3, 4, 5 or something like ABCD, and they never changed it. So so all their POS terminals, all the data they collect from their sales, is dumped into this database. That's how such a simple password. So once their network get compromised, the fraudsters just go in, just steal everything. I think it starts with the basics. First of all is the mindset. I think the company from the CEO all down to the foot soldiers in the stores, they need to have this passion to protect their customers, right? They cannot just saying, as long as there's a sale, we just let the sale go through. I think there needs to be a culture built to be very customer oriented in the sense that not only serving the customer, also protect the customer. And also I think education in the school need to start early. Because nowadays maybe even elementary school kids have a smartphone, right? And I heard from my son, most of when you go out doing things, you do Apple Pay, right? So as a high schooler. So there's a lot of, maybe sometimes you're not using your credit card, you're using your parents' credit card, that make the risk even higher, right? Because there's a large credit limit with a very weak kind of user, being authorized to use that card. So you are basically authorized transaction on your parents' behalf. So you have a weak front, you have a large kind of gold storage in the back, right? There's a lot of credit limits. So that can actually make it more easy target. But I think when your parents use it, they are more risk averse, right? Because they are more mature, they understand they are doing a major transaction. But when you wave that phone, you just maybe not as careful. So I think there's a lot of education. And then I would say, the schools can organize competitions. For example, I'm thinking about build an AI app where you can create like fraud cases, like puzzles, like people to solve. If this is how you prevent this fraud from happening. There's like different fraud techniques that people use, and all those techniques evolves continuously. So I think this game can never get boring. Yeah.
Cat and mouse, right?
Yeah, it's a cat and mouse case that never ends. Yeah.
I think so you talk a lot about you're obviously very experienced in this fraud fields. I wanted to ask, what's the most creative form of fraud you've ever had to deal with in your career?
There's a couple of them. I'll share an interesting story, right? In the fraud industry, in the past, at the very beginning, we use a lot of data. We thought data is our friend. And the more data we are going to have, the better algorithm we have to develop detecting fraud. By and large, it's still the case. But 15 years ago, we acquired this company, PayPal acquired this company called a Fraud Scientist in Israel, Tel Aviv. And they use a completely different approach. They use people that used to work in the Israel IDF military intelligence unit. They have those people left the military and started their own company. So this company used a very different approach. They used the same approach the Israel army used to fight terrorism. So because terrorism, they don't have a lot of data. They are very secretive. And they all have their kind of unique patterns of their niche to try to penetrate the different security barriers set up by different governments, right? So you don't have a lot of data to build algorithms. So this is called an expert system. You basically have analysts that working in the fighting terrorism for many, many years. They build up their experience, their brains, right? Then they use those analysts' brain power to kind of review certain suspected activities and then come to the conclusion, is this a terrorism potential incident or not? And then they use their knowledge to build a knowledge base, and they build what we call risk vectors, right? It's kind of like a unique rule set and variables and mini models to merge with our big data model at PayPal to correct our mistakes, right? For example, you have a U.S. Marines that's working in Virginia for 2 years, they stationed in Virginia for 2 years, and the week before their wife's anniversary, the birthday or whatnot, or their marriage anniversary, or their birth of their first kids, the guy was shipped to Midwest, in a foreign country by Kuwait or Iraq or whatnot. And they try to use PayPal to buy their wife a wedding gift or anniversary gift, right? In the past, those transactions can decline, right? Because you have a Kuwait IP address, place the order on a PayPal merchant in the US, and shipping to their home in Virginia. When you do that triangulation, sometimes things just don't add up, right? The data, they cannot think. I don't know you guys read the Apple paper, right? The LLM model cannot think. They cannot reason. They can just draw statistical conclusions. They cannot explain why, right? They don't understand why. But the human understand it, right? When we use the fraud scientists, their model help us to make sense out of this senseless triangular situation. So they can tell our model this actually is a reasonable transaction. You shouldn't decline it. You should not decline it. I mean, in the big data statistics or scorecard model or regression models, you typically say this is a fraud transaction. But their human intelligence tell us to correct it. So I think there's still people are afraid of AI, thinking everything going to be autopilot, a full autopilot. You 1 year you can just like the AI take over. I don't think so. I think that day, for certain use cases, maybe. But for finance, I don't think you are going to be completely autopilot. I mean, you still need to merge some sort of human intelligence and human supervision to correct machines' mistakes. Same is like the barrier or the fence, safety fences. I think there are going to be some watchful eyes to watch the model, how they behave, and trip the circuit breaker when the model start to go nuts, right? So I don't think there are going to be the days of completely AI autopilot going to take over everything. I don't think that's ever going to happen. Irrational, if human race are rational, we should never allow that to happen.
Well, regarding fraud, I was wondering if you could tell us about like the most like notorious or like biggest case you had to work with like regarding fraud.
Yeah, I remember one case. One time I go to Omaha, our fraud operational center. I saw this poster on the wall. I think this is like early 2010s. There was like a big release of game console. And this fraudster, he's a very patient guy, right? This guy set up an eBay marketplace store for many, many years. I think close to 10 years. He sells like used consoles. He's in the game vector. So he's built up his feedbacks, build up his customer base, reviews, everything, very patiently, right? And then one day he said, I got a special allocation of this game console, the hottest Christmas gift for that year. The console is like $400, right? He said, I got special allocation from the supplier. I have 500 of those. You can reserve it, but you need to pay in full, okay? So he basically collected the $400 deposit on 500 consoles, and then he just took off.
You just scammed.
He scammed all the people.
He waited 10 years to start.
We contact the law enforcement. We work with the international police. We arrest a guy in like Dubai. But still, that's one of the cases. Some people are very patient. Yeah, some fraudsters are very optimistic. They stole your mailboxes. They trick you like social engineering. They trick you thinking, oh, I'm your sister-in-law. Your mother had a heart attack. They do those kind of one-off cases. But there's also, in this case, the big guys, right? The guy that made like $1 million kind of fraud. They are very patient. They don't go into a bank branch and hand the notes to the teller, says, give me $20,000, right? They are very patient. They go to that branch probably for 10 years looking for the opportunity, right? Maybe one day he walked in and said, I'm the new branch manager. Give me the safe to the keys. Everybody will believe him because he knows everybody in the branch. He has been there for 10 years observing and see how the bank works. And during those 10 years, they might have 2 or 3 branch managers. He probably there watching the new branch managers came in, how they hand over the work. So one day he just go in there and fooled everyone. There's this movie called Catch Me If You Can.
Yeah,
right?
that's a great movie.
Yeah, so it's the same thing. Some fraudsters are very, very patient. Yeah, they are very, very patient. Those are the people that are hard to stop.
So since a lot of these fraudsters are like so good at their jobs at like using social engineering to get the upper hand, I was wondering what sort of strategies you would use to catch them in the act or sort of figure out what they're doing in the first place.
There's not a single strategy that can work. I would say that do not click on any links that you don't know. This is just kind of like a strange link, or do not trust a stranger. It's hard to do though, because nowadays with AI, you can simulate someone's voice or even simulate someone's one-on-one video feed, and you are thinking you are talking to a friend. There's a fraudster can come up with an app where I can have a one-on-one video conversation, like an Apple face-to-face conversation with Alex, and that person is not Alex. But when I look at the video, it's Alex. The voice the same, the face are the same. So it's getting harder and harder. This is definitely a big challenge. I don't know how to solve it. I just know the risk is getting greater and greater. Before you can trust someone, you trust their voice, trust their face. Nowadays you can trust those anymore. Someone can use technology to completely fool you. Yeah.
We talked about how as technology is improving, it's easier for people make these scams. Do you think as technology improves, do you think the scams will get better faster, or do you think the protection will get better faster, or do you think the protection will always have to catch up to the scams? Or
I think if you look back history, the trend is always going to be a mouse and cat kind of chasing. As maybe there's a short period of time, one side going to have upper hand, but the other side going to catch up. I think there's just enough on the stake that I don't think either side is going to have a long-term lead. If, for example, fraudsters, right? The payback on this line of work is so high. I know some of the fraudsters that we caught and we interviewed them, right? I mean, the incentive is so high. The regular people go to nowadays a 10-hour job is very normal. It's very regular. Even you're doing a non-techy job, if you factor in the commute time, the lunch time, it's over 10 hours a day. Those fraudsters work a couple hours a day. If you're lucky, then they make 10 times, 20 times, 50 times more money than you do. So there's a lot of incentives for you to. Another thing I think is the law itself. I think the law did not catch up to the cyber crimes versus the physical crimes. But the physical crime now kind of passed too. That's a different conversation altogether. But it just, the crime don't pay anymore. If you look at 10, 20 years ago, if you commit a shoplifting, you get prosecuted. You might do a couple of years. Nowadays, you walk free. Same as cyber crimes, right? If you go to a bank, hand a note to someone, rob a bank, that most likely is a federal crime, and the FBI got involved, you got caught, you've got 10 years, 5 years, whatever. But if you steal 10 times that amount, $200,000 online, you might never get caught. Okay, even if you got caught, you might caught in a foreign country where you didn't commit the crime. You committed the crime in a different country, right? So there's a lot of legal barriers, right? There's contradictions, and this country's law is different than the other country's law, and those two countries are not friendly to each other. They're that's your problem. They steal your money, right? They didn't steal our money, so the guy got a free pass too, right? So it's the law need to be catching up. So there's a lot of cooperations between different government, different legal entities, to make sure the cyber crimes, online crimes, the financial crimes committed online get punished, maybe more severely than physical crimes. Yeah, the physical crime actually dropped quite a bit in a lot of countries. Like in Japan, the police have nothing to do, but doesn't mean they don't have online crimes, right?
I think we're done then. So it was great hearing from you, Mr. Liu. I think your story, I think working in fraud is a very interesting sector, and I definitely learned a lot myself from this. So
it's a good career, I can tell you.
Yeah, sounds fun. Yeah, and it sounds like you're actually interested in helping the general population with dealing with this type of stuff. So, I guess we have one final question for you. So, to a young person who's trying to get into the world of finance or whatever field you're in, or tech, what's some key piece of advice you'd give to them?
I will say the key advice, I'm going to do a seminar for UW students this Friday. I got to ask a lot of similar questions, not just from high schoolers, but even for people in college or people after college, they go to grad school. They ask the same question: what a good career advice if I want to go to finance and technology, right, coupled together. I will say that, if you don't think about money, you are stupid. But the first thing you think about money, you're also stupid. Okay? So I think finance and technology today is the two most highly rewarded verticals. The combination of both, even better. you are kind of like on steroids, right? You are utilizing something that's very fancy and in trend to something that traditionally are very profitable, both from a society perspective and also from an individual perspective. So that's a happy medium, right? That's like a win-win combination. But at the same time, there's a lot of temptations. People say, "Hey, I want to get into like a hedge fund, right? I'm going to be a quant in a hedge fund." Those people making like how many millions a year? So by age 40 or by age 35, I can retire, right? Those are more or less true stories. I know a lot of my friends in hedge funds. Yeah, they can retire in 35 years, but by 35 or 40 years old, but they are 60, they're still working, right? So I think you just got to follow your passion and also follow what you are good at to do. And even you are not good at something, but if you have a passion for it, there are very likelihood you can make it better because you are passionate about it. My son is a big proof. He doesn't know. He played soccer very early on age, but then he gave up. He was not interested. But now he have a new discovered passion. So he made a lot of progress in the past year and a half. So even you are not good at something, as long as you are passionate about it, you can make it better. So always follow your passion. Always try to improve upon it on whatever you like to do, be it finance versus fintech or whatever. At the same time, always remind you of something. Where's the reward in this world? Where's the reward come from? You can steal from someone like a fraudster, or you can be some like very smart ass capitalist, right? You rip off the consumer, rip off your shareholders, and you enrich yourselves legally. It's not illegal, right? It's legally. But there's still a lot of a majority of people who are getting successful and wealthy. How they get there? They are doing things they love to do. They're doing it very well. But the secret sauce at the very end is create value for others. You got to figure out how I create value for others, right? This is got my career take off. I was like an individual contributor. Then I started managing a team. But thanks to the mentorship, thanks to the support of the company that helped me to develop my leadership skills, I learned that the secret success at the end of the day is to create value for the consumers, right? Because when you create value, the money is going to follow you. Most people think, oh, I want this job paying me this number, right? I want that next job take me 2 times that number, and so on. You are chasing the money. You are chasing the money. You can chase money for 30, 40 years. You can maybe make some good money, but you are chasing the elusive goal, right? You are not going to be like Elon Musk or somebody like me in 30, 40 years because you keep chasing this money that's very elusive, right? Or you can say, forget about that. Chasing money is not my first priority. I still need to make some money at the end of the day, right? But let's chase something else. Let's create some value for other people. Create a great product. Create a great user experience. Solve a big consumer pain points. Build a great team. Don't do it yourself. Find your friends. Keep telling friends that you got to work with Alex and Ryan to start a company someday. I think the 3 of you are a good combination, right? Work with someone you trust, and complement your skills to each other, and build something that's valuable for others. People love to use it. People are grateful for you to build something like this because they have been feeling the pain, right? They're like, oh, geez, this thing's like pain to the ass to use. Or this problem is pain to the ass to solve. Oh, why don't think that? You create something that's, makes complicated things so much easier. So people like to be lazy. So if you create something that's going to make them lazier, most likely people are going to love to use it, right? Or make people happier. Or make people stronger. They cannot do this before, but now with your help, your technology, your product, going to do things they can never imagine they can do in the past. So imagine someone invented a robot that can fly. So instead of everybody stuck in traffic on 405, this thing just, pass a robot.
Yeah.
Right? So I think create the value for others and follow your passion, and do it along with a group of people you love to work together, and and embark on that journey. The fun is the journey, but unless you are really, really have very, very bad luck, the people I know, they are all very successful. Some retired like me, money still works. Like my boss at Typical Software, he's like worth $100 million back in year 2000. He's almost 70 years old, he's still working. So, it's not about money, at least not the number one thing in their mind is about the money, because if that's the case, they already stopped working. They already made enough. Yeah, but they just love to do things to create value for other people, enjoy this adventure of discovery, learning, build something, push it to the market, and refine, improve it. And many times you fail. But if you are passionate about something, you love to do it, even if it's a failure, you got something out of it, right? So I think that's my advice. Follow your passion and create something that's valuable to other people.
Yeah, I don't think you can ever go wrong with staying true to yourself and chasing non-monetary values or goals. So it's a great word of advice. All right, well, that advice essentially concludes our interview for today. Thank you again, Mr. Jason Liu, and to our listeners, be sure to stay tuned for more episodes from West Bank Financials as we continue to explore the world of finance.